Welcome to Front Range Facts. This is Anthony Meisner.
And this is Jim Merrion.
We're going to get right into the national market update. Jim, what's going on?
Well, Redfin does a lot of data analysis and releases reports from time to time. And so, I wanted to highlight a few of the things from their most recent report that are applicable to the national audience. And the first of those is that the median home sale price increased 17% year over year to now at $330,000. And then they also said that pending sales were up 21% year over year, while active listings, of course, were down, and their count is at 42%. And I'm seeing various numbers from different reporting sources as to how much it is, but at the end of the day, we all know the inventory is rotten, and it's continuing to stay that way. So they did notice that 57% of listings went under contract nationally in the first 2 weeks on the market. Last year, before this is like basically taken right, I think their data ended at like March 12th. And if you remember, like March 11th was when I think Europe got shut down in the evening there. So pretty much right where the shutdown happened, So last year, the homes that went under contract in 2 weeks was 46%. This year it's 57%. Obviously it's gone up quite a bit. And 44% of them were all under contract within a week though this year. So the bulk of them are selling in that first weekend of the market, just like we're kind of seeing in our local market. And the other thing that was interesting is their chief economist over there, a guy named Daryl Fairweather, he stated that he doesn't call this a housing bubble because the demand for homes is truly there and the buyers can afford these high prices. Bubbles burst. I don't see this happening. The best hope buyers have is that these home prices start to grow at a slower pace, but I don't expect prices to fall. And this is kind of in line with, what I was talking to you before we started recording, Anthony. Even if there is some, forbearance going on, there's been an extension by the CDC now for another 6 months of mortgage forbearance. There's all the stimulus money that's, flowing into the economy. People are sitting on a lot of equity just from the fact that their home prices have gone up so much during the pandemic that even if they need to sell, it's not going to be a distressed kind of sale. So, that no magic bullet, plus then of course now segueing into kind of the national, builder news a little bit, there's just not enough building going on. So our inventory levels are going to remain tight for the long term, I think.
Yeah, and especially here in Colorado. I mean, we are just such an extreme view of what's going on nationally that, if it goes up 10% nationally, we're seeing almost 20% here in Colorado, or at least in some of the local markets. So I just think it's a problem that's going to persist for a while, and it's definitely not inflation, right? This is real market appreciation, and we just keep going back to that because people keep asking us, when are prices going to come down? And the reality is they're just not.
Down. Yeah. I laugh when people are that optimistic. I'm like, oh, you're so cute.
Right.
Yeah. So a few other things, U.S. homeowners gained, $1.5 trillion in home equity last year. So that's where I'm saying there's nobody in distress. You're going to make money if you sell, no matter what, even if you haven't paid your mortgage in a year, So, what's cool about Colorado is that, we make more than the average. So the average household nationally, made $26,300 in equity this past year. So if you're at home thinking about that, I mean, that's over $2,000 a month the average homeowner made sitting on their butt, doing nothing but watching their home appreciate. Plus then whatever government cheese they got if they were unemployed or, just from the stimulus packages. And the other thing I found interesting is that right now, because inventory only has about 1 million homes nationally to sell, there's now about 400,000 more realtors than there are homes for sale.
My favorite stat. Every time I see it, I'm like, oh yeah, more realtors than homes, of course.
Yeah, and of course, if you're going to sell 1 million homes, there's probably about 800,000-900,000 other buyers agents. Then, some people are going to double end it, but so there is. I guess theoretically a paycheck for every realtor, but God, there's a heck of a lot of agents out there not selling anything.
Just one paycheck per agent, right? Should be a good month.
Yeah, and we talked before last podcast. I remember that lumber prices had doubled in the past 3 months. That's what we reported on the last podcast. Now the soaring lumber prices have added $24,000 to the price of a new home, and just on my own Facebook groups and next door, I've been seeing this thread this past week, which blew my mind. I was tracking a thread of a bunch of homeowners that were comparing price quotes of finished basements, where they had an unfinished basement and they wanted to get it finished. And, anywhere from about 700 to 1,200 square feet of space, is what kind of they were bouncing around. But basically they were saying that their quotes that they didn't act on last year are now about $30,000 higher to get that same basement done by a lot of these contractors. So,
I absolutely believe it. I mean,
yeah.
I went out to buy a little lumber to do some stuff for the kids, like the little play place, and it was like $8 for a 2x4. I mean, it's out of control. Like, you're talking about a 2x4 that 2 years ago was like $253.
Yeah.
It's insane. And now it's like the most basic thing you need to build a house.
Yeah. I was thinking about, putting a bathroom down in my basement and in another bedroom. And I was just like, you know what, let's wait a couple of years and let these prices, because those prices, unlike real estate, the construction prices are eventually going to soften. The contractors are eventually going to get hungry again, and lumber prices will come back to earth at some point. Now that the Suez Canal's back open, anything is going to, happen. But
it also creates just so many dampers on why all this stuff is costing more money. It seems like every time we turn around, there's another hurricane or a Suez Canal closure.
Yeah. And, the last thing about the national news is the number of homes sold before construction even began rose 20% year over year in February. And that, is just something I've been like really very much feeling, the few times I've been going to new construction this year and, talking to the sales reps there, you have to go into the assumption there's literally no inventory that's quick moving anymore. In fact, every time I've looked at a website, the builders always have a quick move-in section, a little tab that's, hey, this is what we built on spec. We're ready to sell it to anybody who wants it. It's going to be ready in a month or so. Nothing, and now, you're lucky to even get a delivery date of this year if you're trying to buy new construction. So.
Absolutely. We go over to the showing time index. This is the same slide we show you every month, but how awesome is it that now the Zillow bot showing time, they have access to pretty pictures. So here's the real.
This is a $500 million picture right here.
It is $1 billion picture. Isn't that what it was? 500 million or something?
500 million, $500 million. Yep.
Yeah, $500 million. Well, in the West, you can see that based off the showing index, showings are up 98.4% in the West region. So that's the one you guys probably care about the most because that's where we all work. But as you can see across the United States, soaring showings. And it shouldn't really be a surprise to anyone because there's just not a lot to see. So everyone has to go see the same products. And you're out there working twice as hard to get a home under contract, at least, if not more, right? So these are very indicative of that.
And every month we show two different showing time slides. And I think this one, Anthony, is going to get a little janky in the next few months because there is, zero activity basically starting about now, so it's going to show some absurd gains year over year kind of thing. But the other one's going to definitely be more accurate.
Yeah, until we start looking at some of these year over year trends with graphs we can sort of interpret, it's going to be difficult here over the March, April, May numbers to really tell what's going on because 2020 was just so weird, right? We're really going to have to compare them to years past. So it'll be fun for us to kind of explain that. Don't forget, guys, I'm Anthony Meisner at Land Title, and we are here every single month to bring you all kinds of great updates. That was our national portion. We go every time from national to Colorado into more local markets. So hang in there, hang with us, and we will teach you all about Colorado in the Front Range. You can always catch me on my cell phone at 303-968-9868 or at ameisner@ltgc.com.
And I'm Jim Merrion, Realtor here at Coldwell Banker, Boulder, Colorado. My phone number is 303-548-0243. Email is jim@ourcoloradohomes.com. And if you'd like to email Anthony and I at frontrangefacts@gmail.com, feel free to do so. And feel free to check out our other podcast on the real estate industry focused on blockchain and cryptocurrency technologies at Get Real with Blockchain, which is available on iTunes, Spotify, et cetera, et cetera.
Absolutely. Here's that other showing time slide we were talking about. This is the one that's specific to Colorado. So you can see here over the last 3 years, it really gives you a good comparison. So that lighter blue line being 2019, that would be the average showings that we were seeing as inventory was starting to rise, as you could really get a good picture of demand. And here we are past where the shutdown started to occur during COVID. And we are well above where we were in the 2019 numbers. And we're pretty well off to the races. We have been all year. So Jim, what's your big takeaway here?
Well, the thing that I've been scratching my head on this, for the last hour when I first started looking at this was a hell of a dip that happened in the marketplace, basically in mid-March. And I know that we had, one of the snowiest storms in March history, but the amount of time that drop looks, I wonder if the conversations I've been having with some other agents about 3 weekends ago, I think we were talking about how soft that weekend was for showing activity. We had new listings. Some of us had put new listings on, and I was also I had my whole weekend with my family, and it was just like one of these things where it was crickets chirping kind of, I'd been busy during the week, but then the weekend rolled around. I was like, what's going on? Nobody wants to see anything. And then I called a few other agents and they're like, my new listing had 6 showings, and I'm like, what, and so that kind of is exactly where that drop to below, zero happened. And so I don't know if it was just the impact of rates going over 3%, which is kind of where that was in combination with the snow, but we did have a kind of a drop in activity for a short period of time. But we're back to above average, above where we were last year now. So that's good. And the year before above it.
Yeah, and you'd think it'd be spring break or something, but it absolutely wasn't because it's far too early in March, right? We're dealing with spring break right now towards the end of March, beginning of April, and usually see a little blip on the radar there. But you're right, it was a very weird time, and I think it's probably just strange consumer behavior we're not used to seeing.
Yeah. And then just, we talked a little bit about CoreLogic studying the equity gains in the United States. And, the national equity gains was like 26,300, I think. But in Colorado, because we always seem to do better than the nation when it comes to real estate appreciation and just our market strength, the average Coloradan saw a $32,000 increase in their home equity last year, which is phenomenal. So $5,700 more than the U.S. Average, which is great. And what's especially interesting is, of course, if your home is priced more money, you're probably going to see a bigger appreciation dollar amount, and that helped through. When you look at Boulder, saw about a $47,000 increase in the average homeowner's equity in Boulder last year, and then Colorado Springs was next at 33,000 basically, and Denver residents were about 1,000 less at about 32,000. And then, Fort Collins saw about 24K, and Greeley was down at about 20K, but very solid numbers for everybody involved in that. And what that translates to is huge equity, right? For people. And that's just, if you're listening at home and you're thinking about buying a home, the idea of a distressed property in Colorado, I've been, laughing at people for years when they talk to me about wanting to buy a foreclosure or get a good deal, because there is no need to be a distressed seller in this market. The average Boulder homeowner is sitting on $400,000 in equity. In Colorado Springs, the average homeowner there is sitting on $188,000 in equity. In Denver, it's close to $260,000. So, people are doing very well with their home equity gains. They're sitting on mountains of cash in their home, and that's going to insulate them from any of these vagaries that pandemic or economic shifts in the short term might yield.
Absolutely. I mean, I think we've been talking about this for a year now. When's the foreclosure boom coming, or when's whatever happening, right? There's not going to be short sales. There's not going to be any of that. If there's definitely going to be some opportunity where people are going to have to sell their home if they've been unemployed this whole time and they've been in forbearance, but they're going to have a huge check coming out of it. So that's not going to be an opportunity for a bunch of investors to hop on really needy, desperate sellers, right? Yeah. Or, I mean, realistically, the front range is going to continue to grow at these pretty record paces. And the more that the economy shifts into working remote, people are going to live where they want to live, which is Colorado, really obviously right now. And there's a lot of other places, of course, too. But some of these metropolitan areas are reaping the benefits of this diversified economy and just this shift in how people are working and where they're living.
Yeah.
If we go over to, this is some data provided by the Colorado Association of Realtors. I think this gives you kind of a 30,000 foot view of the entire state, right? It tells you in Colorado, the average sales price year over year went up 22.2%, right? That we went from 485 last year to 593 this year. So just an amazing amount more expensive to live in Colorado. And that is fueled by all of these factors we've been talking about. The median sales price, that's more of what I think the average consumer is probably realizing. That's what the average person's dealing with in this case. And usually I'm not a big median fan, but in a position like this now, there's just been so much activity in the luxury market and so much money coming into Colorado that The median actually could be a better indicator of what the average person is feeling, or the median person is feeling, really. So those median numbers at 13%, that's a real appreciation rate that the state of Colorado is seeing. And at 465,000, it's getting a little more expensive to live in Colorado, but with interest rates where they are, it's actually still cheaper than it was probably a year ago to live here.
Well, and this is why I keep telling clients some people get focused on, paying private mortgage insurance. They're worried about paying the $150 a month or whatever it is for the PMI. And I'm like, you can't wait, because the cost to you is way more than 150 a month. You just aren't seeing that, it jump now, so anybody who's got 5% down should, be trying the heck out of buying a place right now, because even if prices level out at some point, they're not going to be going down. There's just not enough inventory. The fundamentals aren't there. And
the demand in the rental market is no different, right? This demand is through the roof. You can really see that in this section at the bottom where it says month supply of inventory. As a state as a whole, for a detached house is down to 0.6, when a balanced market is somewhere around 4 to 6 months. We're at 10x less than balance, right? So what that tells us is that there's just so much more demand to live in Colorado than there are homes. It's creating all of these appreciation rates and all this inflation in the real estate market. So lots of Coloradans are making a lot of money.
Yeah.
The other thing is, if you look over to the townhouse condo market, you can really see that for a while there, that was not really trending in the same direction because people were a little scared to live in those city centers. Over the last few months, because of the shortage in inventory, that has all also been absorbed in the townhouse condo market. We was saying for a while there, like, there's a lot of opportunity in the attached market. If you're having trouble getting something under contract, you're not seeing enough properties, if you don't like what you're seeing, go move over to attached. Well, there may be like this much difference now, right? It's really minuscule. So that window is now gone, but there is still a lot of opportunity to purchase in the attached market, and is definitely cheaper. I mean, the median's at 345, we're at 485. So if you need to get into a home as a first-time home buyer, this is still an excellent place to be. It's still an excellent market to get into. And you're realizing real appreciation gains here, right? Double digits again in the townhouse condo market across the entire state. So that is pretty impressive.
Yeah.
Don't forget who we are. This is our shameless self-plug. I'm Anthony at Land Title. You can catch me at 303-968-9868.
And I'm Jim Merrion, realtor here in Colorado, Coldwell Banker. I'm at 303-548-0243, and Jim at ourcoloradohomes.com.
We're going to break down the local markets for you next. So, Jim, what's going on in the Denver metro area?
Yeah, so this is the data that SMEDRA, the South Metro Denver Realtor Association, shows. And so pending sales are up almost 12% right now. New listings, again, that inventory shortage, we're down 8.2% in new listings. The closed listings, though, are up about 3%. So you can just see how the market is narrowing quite a bit. You've got less new listings, pending and closed are up. And that's translated that into a median sale price increase of 11.3%. And 6 days less of inventory in the MLS, and 3 weeks less of inventory. So we're only at 2 weeks of inventory right now. So it was 5 weeks at this time last year of inventory, meaning if nothing else came on the market, how long it would take to sell everything. So we have 2 weeks of inventory right now that we're sitting on here.
And that's generous. Let's just put it that way, because you look at the fact that all of Denver Metro has 1,833 homes at the end of February for sale. Here we are at the lowest record inventory we've seen in a very long time. And that's creating just a shortage. So this is the first time in the first month year over year that we've seen the pendings are actually less than they were a year ago. And that is purely fueled by the fact that there's nothing to buy. I say nothing, there's 1,833 homes to buy. But when you look at a metropolitan area of a few million people, it's just not enough. So that is definitely creating the really high inflation, or inflation, it's not inflation, it's appreciation, right, in the market. So we have 14% average appreciation across all of Denver Metro, bringing that average sales price to over 500,000, right? So it is becoming more and more expensive to live here, but there's obviously money to support it, and way more people that want to live here than can.
Well, we have, I think there's 6 counties in that metro area data, right? And to have only 1,800 homes for sale amongst them, that's 300 homes per county. And
Pretty
that's
ugly.
pretty ugly.
Yeah, and if you really want to see how ugly it is, check this out. This is the month supply of inventory by county. You can see them all down here, the ones we include, and you can also see just how if a balanced market is 4 months to 6 months, and we're at 0.38, we are at 10 times less than where we need to be in kind of a healthy middle of the ground market, right? Where we're not going to get high level of appreciation, but we're also not going to be stagnant. Um, where you're seeing the most activity and the hardest places to buy homes are places like Broomfield. I mean, Broomfield is 80% down in their actives. They have literally like a matter of less than a week, right? And that's for the entire county. So when you go to places like Denver, Denver through the pandemic was really struggling and they actually had more inventory than anywhere else. Well,
Yeah.
it's just not true. And by the time it is, April, May, or June, this will be probably on par, if not lower than every other county out there. But there's opportunity to buy in Denver at 0.6 months of inventory. It's almost double what the state average or the metro average is. So go show your clients homes in Denver if they're considering it, because surprisingly enough, it might actually help you get something under contract.
Yes, yes.
Yeah. If you look at the days in the MLS, so this is average days in MLS. When we pulled this data, we were all like, wow, 25 days from active to under contract seems like a lot, because what all of you guys are feeling and everyone out there shopping right now is like, oh, well, everything goes under contract the first weekend. Well, we looked at the median, and the median on this is about 5 days. So there are definitely homes that have been sitting on the market that are going under contract because of all this demand. Prices are coming down on some of those, which is artificially deflating some of these statistics.
It's interesting to break it out like that, Anthony, because that's exactly what I've been just noticing anecdotally when I'm looking at, I have certain clients who don't have a lot of cash to put down. And so, I tell them, like, look for the ones that have been in the market a while, because you cannot compete in the ones that are only on for a weekend. You don't have 100K, 200K to put down. And it's amazing how when I sort that list and I'll see 0 to 7 days on the market for the bulk of them, and then there'll be a few where it's like 150 days or something like that, and 3 or 4 of them are like way long and everything else is way short. So yeah, that's where the median, I think, really helps to paint that picture correctly.
Absolutely. At 5 days, I mean, I feel like that's even generous, because how many of us are pulling things off the market? We see them done by Friday. Like I have a slew of under contracts coming in on Fridays right now, which we would have never seen before at the time of the company.
Yeah.
Because people, wait till Wednesday, Thursday, they have showings for a while. But no, when you got a showing every 15 minutes for 2 straight days, you get 70 or 80 or 90 people through a house, and you're like, just shut it off. We've had too many offers. There's too much demand.
It's been happening so often. It's getting aggravating. I tell all my clients now, there is no weekend available to see it. You've got to be with me on Wednesday, probably Thursday, Friday, and that's you're lucky to even do Friday in some cases.
Absolutely. It just depends on when it comes on the market. I mean, you really have a 2-day window to get it under contract. That's the best you're going to get, and we're at the mercy of just all this low inventory and tons of buyer demand. And you're really seeing that in some of these other price ranges, right? If you're working with those guys in the median home buyer range, I mean, look at this. If you're at under $1 million, you're less than a month. If you're at under 600,000, you're at a week of inventory on the market, right? Across all of Denver Metro. And it just gets more extreme and more extreme the closer you get to the bottom end of the market. And the nice thing you can see here, though, I mean, look at this. There's almost 8 months of inventory at 3+ million. So if you're in the luxury market, those houses, though, the averages are coming on, coming off after 88 days. So what that means is, even though there's a lot of inventory, buyer demand is super strong in every price range.
Yeah.
Right. Those numbers are bouncing around quite a bit in the days on market, because that's our really measure of buyer demand. But what we know consistently is they are very low. There's tons of people shopping at every price range from 0 to 3+ million, right?
Oh, yeah. And they're spending over asking price quite a bit. The ones that are really hot, no matter the price point, they're going for a lot more. There's just one in Boulder that closed like 2 weeks ago that was priced at 1.9, I think, sold for 361,000 over asking price. So
is that all? Yeah, no, I hear all the time. I mean, I hear homes all the time going for 10+% over asking price. So when you have those really cream puff listings, they're pretty impressive. And if you're a home buyer and you want that perfect property, like, you will pay a premium for it. Well, I'm Anthony at Land Title, and this is Jim Merrion at Coldwell Banker. we're going to move over to a section on some of the other local markets outside of Denver Metro to give you a little bit more of a perspective of where all the buyer demand is coming from and what's going on in some of these submarkets from Fort Collins all the way to Pueblo. So stick with us on that. You can catch me at 303-968-9868.
And you can catch me at 303-548-0243 or jim@ourcoloradohomes.com.
Okay, so you want to start at the top, Jim? This is Larimer County.
Yeah. So our friends up north in Fort Collins, new listings, just like everywhere else, are down. They're down a bit more though. They're 15.7% down in year to date in new listings, but their sold listings they reflect just a huge demand, and they're up about almost 15% year to date. And even for looking at year over year, up 16.5%, so very strong. Median sale price a little bit over 10% gain there as well. And then when you look at the townhomes and condos, new listings they're down only 6%, so it's not quite as bad. Sold listings, I think it's probably a fact that there probably isn't enough inventory, because their sold listings are down 7.5% overall, which is the opposite of what we saw in the single family. But the median sale price there, again, super solid at 12.3% increase year to date, which is just fantastic. And then, days on market is still, very low for both of those. So they've got, less than a month of inventory, 0.6 months of inventory, single family, but they've got a whole month of inventory right now for, townhomes and condos.
It's very generous. It might be the highest in the entire state.
Yeah, I think
look over at their friends in Weld County. They're down to 0.6 in the townhouse condo market. There's just nothing for sale on the market. You're talking 40 total new listings that came on in February. Those new listings, if you look at detached, it's much more of a larger portion of what's being sold out in Weld County. But same thing goes in Weld County. I mean, you're seeing 10 to 12% increases in prices, whether that's median or average. And you're just seeing these huge drops, 50 to 70% inventory, depending on detached or attached, which is very similar to what we saw in Larimer County, right? Mm-hmm. These, Weld County is definitely getting a little fuel from the metro area and what's going on there, but not enough to really curb anything. I mean, people are paying well over asking price, 100.5% in February for a single family home, and townhouse condo, 100.6%. I mean, these numbers are still really, really high. They're driving high levels of appreciation in the market. And we don't really see any signs of anything negative taking place here. Money's cheap. People can pay for it, right? Most people think about the price of a house and its monthly payment when they go to purchase it, not in the amount of dollars it's going to cost. So when you realize that, right, if you look whether you're renting or buying, and you say, well, for $2,000 a month, I can get this house or I can rent this property, right? That's generally how people kind of purchase homes. So when you're seeing that and the cost of money is so low, it really can fuel, appreciation in the market like this, no matter where it is. And in Weld County, they're experiencing it just like anyone else. And the fact is, days on market are down to 50 days on market. And up in that neck of the woods, that's active to sold, right? So that keep it in mind, at about 30 days, what you saw in the Denver metro area. And if you look at Larimer Weld, they were a little above that at 61. So very, very hot market in Weld County. If you go over to the Boulder County market, I threw in some of these other slides just to give you a little more perspective, since that is where Jim and I focus some of our attention. And Boulder County is seeing 18.17% average appreciation. And it's just because there's nothing on the market. 263 total homes, which now Boulder County is starting to realize a decrease in under contracts taking place because the inventory level is so low, right? It's been low for a while. But if you look at some of these other areas, you can really see, days on market, days in the MLS, you're seeing a week of inventory in those, those median price ranges again. Even the luxury market is taking huge dives. And some of the inventory that's been sitting on the market for the longest amount of time in luxury is actually coming off the market because there's so much demand in luxury in Boulder County. So we're seeing some really big takeaways there. As you can see here, this is the luxury market right here, right? 1.5 million plus is pretty much what it takes to get into luxury in Boulder County, maybe 2 million plus. And they are just flying, right? 175% more homes sold year to date in the 3+ million market. So it gives you an indication of where that's taken us. The only reason we're suffering on some of these numbers like 800,000 and below the reason we have less under contract than before is look how low the inventory level is year to date.
Well, and that's where I think it's, we're seeing really a incongruity that people who aren't familiar with the data are going to look at things and go, oh, it looks like it's getting better, but it's not, because it just, the fact that there's nothing to sell is what the problem is.
Yeah, if you want to be a builder right now, it's a great time to get into building houses for sure. Outside the fact that it's so expensive to build them.
You can't find anywhere to be at.
And you might be waiting 6 months or a year on a garage door from what I hear. But that's it.
God help you if you need an appliance.
Yeah, exactly, right? You can have an empty house though.
Yeah, so El Paso County, right now, new listings are down for single-family homes about 10.6%. Sold listings are down almost 1%, and that's specifically because of the problem we were just talking about with the lack of, inventory. Median sale price has really jumped quite a bit. These guys continue to be the outperformers, of the market at 16.2% year-to-date increase in sales price for a single-family home, and then on the townhome side too. The median sale price has jumped 20.7% year to date, which is phenomenal for El Paso County. Sold listings there are up 14%, yet the new listings are down 17% for townhomes and condos. So it's quite a bit of a jump.
The number that stands out the most to me in these is this average days on market in the MLS for all of the attached units is 11.
Yeah.
I mean, that is like less than half of what Metro was. And even in detached single family, the average at 19 is just substantially lower. And 24. I mean, these guys can take the cake for the least amount of inventory.
I think you raise a good point of that, because when you look at the fact that the days on market are 11 days for townhomes and condos, the good agents out there that are listing a property are probably putting that listing in the MLS on, say, a Wednesday or so. So those homes are not surviving 2 weekends on the market. They're literally being snapped up somewhere along the line of either the first weekend or the Monday or Tuesday after, when the agent's finally able to go through the 20 offers that they've got to process. It's crazy.
Absolutely. And it's just a function of that 0.4 months of inventory. When you're 10 times less than balance, I mean, we are super extreme right now as to where the inventory is. And we've been tracking this for years, right? The more we look down at El Paso, the appreciation rates that they're getting at, look at this, 16%. I mean, those numbers are caused by these low inventory rates. And those low inventory levels have been there for years, right? I mean, it's probably been 4 years now that the inventory levels in El Paso County just can't keep up. And they are building like crazy.
It's tough. It's tough.
We did.
Yeah, we wanted to.
Jim wanted to talk a little bit about Pueblo because, well, it really is almost getting attached to Colorado Springs at this point. Like, people are commuting back and forth, and it's become a good part of the Colorado Front Range real estate environment. So we decided to add it in.
Yeah, not necessarily something we're going to do every time, but I just thought it was interesting to take a look at it because, it's really hard as an investor to find, good properties that are in a budget conscious kind of, place anymore in Colorado. And so, I heard from some agents that a lot of Colorado Springs, investors and Denver, investors are now starting to look further afield. And so Pueblo County just has been remarkable, it looks like, because their median sale price is up 25% right now, year to date. And they're, the fact that, their new listings are down a couple percent, sold listings are also down a couple percent because there just isn't, as much to sell. And then even the townhome and condo market, you're seeing a 26% median sale price increase. And, they don't have many townhomes and condos in Pueblo to sell, period. So having a 35% drop in your inventory for new listings isn't that big of a deal because it's a matter of 8 listings difference, but still it's just remarkable how they're really just appreciating quite quickly, and their average days on market until sell 39% for the attached and 12.5% down for the single family. So it's everywhere in Colorado it's super hot.
Yeah, and it really is an extension of the Front Range at this point, right? I mean, it's surprising that there's still this big divide on the northern side between Cheyenne and Fort Collins, but you give it time, we'll be there, right? We're going to start talking about Berthoud and all these other little tiny communities, Frederick, Firestone, Dacono, like all those are really coming into our conversations here when you get into what's happening on the Front Range, because we're going to be one slew of houses from Fort Collins all the way to Pueblo before long, right? It won't take that long.
Yeah.
Well, thank you so much for joining us today. I'm Anthony Meisner with Land Title, and you can reach me on my cell phone anytime at 303-968-9868 or ameisner@ltgc.com.
And I'm Jim Merrion, Realtor here at Coldwell Banker. My phone number is 303-548-0243, or feel free to shoot me an email to jim@ourcoloradohomes.com.
Don't forget to check out our other podcast, Get Real with Blockchain, and you can catch that anywhere you catch podcasts. Otherwise, we'll catch you next time. Thank you.
Take care. Thanks.